Hey traders, Raghee here, and in this recap video we're going to talk about what you do when a market is actually accelerating away from a longer term entry, and yet you know that there's a certain direction that you want to engage the market in. And the way that I do this, and I'm going to show you an example from a trade alert and a setup that we took in crude oil today, is I'm interested in a crude oil trade. I'm much more interested in, say, a 21 EMA entry, which is a little bit more conservative. And yet the market eluded my entry by just a bit. So I'm not going to chase. What I will do is look for an alternative setup on a shorter term time frame. So immediately when I have a daily time frame that's not coming to me, not hitting a level that I have a limit order to buy at, I'm not going to chase. I'm then going to go to a short term time frame, typically a 60-minute time frame or less. And then in that, I have reduced my risk because now the market's moving away. So then, really conceivably, it's giving me a less envious risk to reward on the daily. But I can then adjust for a smaller risk reward by looking at a 60-minute, 30-minute, 15, or 5. In this case, the 30-minute gave us a really great exhaustive entry based upon an hourly price movement range. Now, when people hear me talk about these price movement ranges, I think they think we're just number crunching and looking at just kind of a rhythm or a probability. And we are, and they're very good probabilities, but it is actually about psychology, external psychology, market psychology. And it's this kind of market psychology that has given me an edge for the better part of the last half of my trading career. And when I really specialize and dare I say mastered this particular art. And that's what allowed us to look at a 65.10 to 65.03 zone, as you can see highlighted here, and enter long for what now is closing up on a $1 move on the 30-minute chart. Very low risk. This was at worst a 30-cent risk trade. We identified an exhaustive zone. And when I look at, and I have to look at the time that we sent this alert out, but I believe it was 8:47 a.m. Eastern. So we had a lot of heads up before 8:47. In fact, this trade did not trigger until 11:30, I think it was. Yeah, 11:30 is when this trade triggered. So I'm not going to be, alerting, hey, get in now, get out now. That's not ever it, because now is what? I want you to have plenty of heads up. I want you to be able to look at the trade, look at the chart that I send via the alert, look at the order, and then place it, and then wait for the market to come to you. In this case, 8:47 a.m. to 11:30. That's a good amount of time to kind of get acquainted with the strategy, the risk, and there's no herky-jerky, following me blind type approach. And I'm mentioning this for two reasons. One, I want you to understand how these alerts work. And two, this is how it worked on the 30 minutes. So rather than chase the daily, I took a much better risk reward and grabbed the 30-minute and used the psychology of repeating price movement ranges to capitalize on it. By the way, our first profit target, and let me show you what our spreadsheet looks like. Our first profit target was, and I'm going to give you it right now, 65.40, and then we trail it. So in the premium video, I'll talk more about the trailing and whether or not, how and where we're going to scale out of this winner, because we don't have to get out of it. One part of the position, again, if you took two lots, you realize a profit on one and you still have a second that you can play with. So we'll talk about that and a whole lot more, including Apple, Amazon, and my orders in the NQ and ES in the premium video.